Hello, everyone, and thank you for joining us today. My name is Joy, and I'm the marketing manager here at Innovia. And presenting our webinar today is Aldine, who is one of our technical functional consultants. Before I hand it off to Aldine, I just want to call attention to the Q&A box at the bottom of your Zoom screen. If you do have any questions, please go ahead and put them in there, and we will answer them as soon as we can. And with that, I will turn it over to Aldine.
Thanks so much, Joy. I'm excited to talk to you guys today about inventory. Inventory is one of my passions personally, and today we will attempt a bit of a mini masterclass covering 3 expert tips to count and account with ease. So whether you're on the operations side or you are in the accounting finance side, hopefully these tips will help you count and account with ease. As Joy mentioned, my name is Aldine Simmons-Thorpe, and I am a technical functional consultant with Innovia. And what that means is I get to see the functional and the under the hood of NAV or Business Central as well. So as we talk through these expert tips, I will try to give you some insight on both sides, and we will cover that in our tips here. All right, so we talk about effective inventory management being the dream. But what does that actually mean, right? So we're going to go through a couple different items here. And the first one I want to start with is your physical inventory counting. So I'm going to bring up my Business Central screen here. And please let me know, Joy, once you can see that. I think everybody should be able to now. I'm just going to pull up an item. Perfect. All right. Now in my summer market, there are some items that I like to pull up the warehousing section. So as we talk about counting, a lot of clients often don't fill out these sections on their item cards. So in the comments or in the chat, please let us know if you have filled out these sections of your item card. Now you might be asking, why would I fill them out if I haven't? Now, things like your warehouse class code, if you require special equipment, as well as an inventory counting period, can help you when it comes to accounting and counting your items. So your warehouse class code typically linked to your ABC analysis or your SKU rationalization, how you classify your fast movers, slow movers, and maybe obsolete inventory. If those are defined, if you are running particular count functions in Business Central, and we're going to look at a physical inventory journal in a moment, if you are running processes to count in Business Central, you are able to filter by your warehouse class code. Now, you can also define a counting period. So if you are counting items weekly, monthly, quarterly, annually, semi-annually, however that frequency is defined, you're actually able to pick a period code for your warehouse. And again, you can filter and count by those period codes. Now, those period codes will also, once you've counted, will tag in a last physical inventory date, which will essentially tell you the last time you counted it. And of course, will populate your last counting period, as well as prompt you as to when the next count should start based on what you've defined as your counting period. So if you haven't filled out this section of your item cards yet, now is a really good time to take a look at how you can fill out this information so that when you run your counting processes, whether you're running that through a physical inventory order or a physical inventory journal, or if you're using an advanced WMS system, which will be running off of some of these fields here, you will have the flexibility to define what should be counted, and that can be tagged in with your period code as well. Okay. Now, the other cool tool I want to show after we've covered our item card is our physical inventory journal. Now, if you are not running a very complicated counting process, your physical inventory journal can be a really easy way to keep track and count of your items. Okay. So on my screen here, I pre-populated my physical inventory journal because oftentimes when we run these, we run into errors while we're recording. So For the purposes of this call, I have updated it here so that we can have some values to see. Now, once we've created the journal, I'm going to walk through how we prepare it in a second. Once you've populated the journal, it will calculate for each item the quantity you have on hand, which is your quantity calculated. And of course, it will tell you what location. You can also include with personalize your bin here. And then you can add the physical quantity that exists. So if I am counting, I can say the system has calculated 32. I can indicate that I've only found 30, and it will calculate an adjustment quantity. And you'll see the entry type on the journal switch from a positive adjustment to a negative adjustment to align with what I've defined. So here I've told the system, because it's counted 32, I've told it I physically got 30 and my quantity is 2. Now, if you are not using an advanced an advanced WMS system that has a count functionality on top, the physical inventory journal is a really quick way to run your counts, whether they're quarterly, annually, weekly, and also able to post that through really easy for you. Okay. Now let's run through the prepare option really quickly here. So you remember those fields we talked about on that item card? In your physical inventory journal preparation, you can actually define with those fields here. So your warehouse class code, if you've got that, in my example here, I've got cold, dry, frozen, etc. You could have it as A, B, C SKUs, flow movers, right? The other thing we can do here is our physical inventory counting period code. So again, we've got a code here for fast movers, which we count this 6 times a year. Normal, we count twice a year. And our slow movers, we only count once a year. Once we define the counting period and we include that as a filter, we can populate a journal for just those items. And of course, once that's calculated, we can export that to Excel to make it really easy for recording purposes. And once those counts are complete, we can come right back into our journal and post that through. If you are not using a physical inventory order, or you're not using an advanced count functionality on a WMS system, this is a really quick way to get a clean count and have your accountants really happy, because once you post this through, you will post the correct adjustment type right into your adjustments, and your inventory will be updated instantly as well. Okay. Some of my best practice recommendations for counting: proper documentation. So if you're not already using an advanced warehousing system for count, highly recommend you look into the physical inventory journal as one of the easier ways to generate a count and record a count. And if you're not using that, if you prefer something a little bit more robust, in your later nav versions and SaaS versions, there's also a physical inventory order, which allows you to create things like recordings and printed sheets that can support a count to mimic what your advanced warehousing systems would provide. Okay. Accurate record keeping is paramount. So on our physical inventory journal, you'll see the system is running the adjustment for you. We indicated we had 32 in inventory. We indicated we counted 30. And so it automatically calculated 2, and it is going to use the unit cost on your item card to update the cost there. Once that's posted, that goes through. Whenever we can minimize manual entry, it's always recommended so that we can minimize errors. And of course, if you're counting large quantities of items, we highly recommend that you look into things like barcoding or RFIDs to streamline your counting process. Okay, if you're ready to take that to the next level, that's a really good way to minimize manual entry, as well as increase the accuracy of the count. Okay? Without a solid process, it makes it very difficult for you to have effective inventory management. Okay. So we talked about our physical inventory journal, which is our BC Swiss Army knife, if you will. Very quick, very simple, and very effective. So let's talk about inventory adjustments and reconciliation, aligning the system and the stock room. So to reconcile or inventory, it's very important that we review counts and complete our reconciliation in a timely manner. Now, once counts are complete, oftentimes we will have recounts if there are huge variances or discrepancies between what the system suggests and what the physical system, sorry, I mean, what your physical count actually reflects. And so how do you handle discrepancies, right? Are you typically doing a recount with a second count? Or are you processing the discrepancies to a damage or hold location until you have had an opportunity to validate? Depending on how you manage your reconciliation, that can really have a great impact on how accurate your inventory counting and accounting is, okay? We recommend with your discrepancies that we review them at time of count, right? Whether you are adjusting inventory up or down, before you post that adjustment, add a secondary count or secondary validation process to ensure that the count adjustment you're posting through is the count adjustment that is accurate, accurately reflecting your inventory. Now, how can we validate or balance inventory counts that are completed to what's been posted to the GL? There is a very nifty report called a subledger to GL reconciliation report. I would love to know how many people have already used that report or are familiar with that report. So feel free to let us know if you've already used it or you are looking to use it. Your subledger to GL reconciliation report will really help you spot discrepancies between your subledger, your inventory accounts, with your GL, right? So whatever you're posting based on your inventory posting groups and into your inventory adjustment accounts in your GL, we can actually take a look at the subledger level to see what that looks like. If you are having questions about how accurate your inventory is, if you're looking at things like your inventory valuation with questions, that subledger to GL reconciliation report is going to be your best friend. Now, aligning your system best practices, we recommend that you reconcile your data quickly so that you prevent unintended inventory errors or discrepancies. Typically, when counts occur, transactions may stop. And so if adjustments are not made in a timely manner, transactions can impact what those adjustments look like, right? Inventory you had before and was planning to adjust out may have already been utilized, or you may have discrepancies with your posting dates. So when you're doing things like your inventory valuation or looking at inventory amounts, that can cause discrepancies as well. So making sure that you adjust basically instantly where possible or in a timely manner with your accounts is very important. Okay. Now, there are a couple of reports that I like to run when I look at inventory and try to keep track of where my inventory is. Inventory valuation report is a really good report to use. I just mentioned it before as part of your reconciliation, but your inventory valuation report can help you understand what the value of your inventory is by item, by location, by costing method, and is really helpful when you're trying to lock down where your financial discrepancies are with your items or even costing discrepancies. And if you're running things like margin analysis reports, this is a really good report to run as well to help you understand that discrepancy. Your inventory availability report is also a really good one to use. If you are planning to run that, you have a couple different options. You can do that by location, by period, and if you are using variants, you can actually run that by variant as well. So if you're ever trying to track down where your inventory is, maybe you're seeing in the system that it's showing you a quantity, but you can't quite figure out where this quantity is, the inventory availability by location report is really helpful. Now, if you've got one main location or maybe a few main locations, and so your discrepancies typically happen at the location level, then if you're using bins and certain levels of advanced warehousing setups in Business Central or NAV, you can run your bin contents report. And that will tell you by location where your items are and which bins they're in. So always a good way to do a sanity check, if you will, on your inventory, running that inventory availability by location, period, or variant. And depending on your location setups, you could also run that bin content report to kind of see where things are. These reports actually help stock planning. So inventory planning, stock planning, be very easy. Sales order commitments, aligning inventory can be difficult, when you're trying to lock down where inventory is, or you've got a demand for it, whether as a transfer or a sales order. So running this report can really help you track down that inventory. And of course, if you're doing multi-location control, that report by location is also very helpful. We did talk about one of my favorite reports. The other one I do like is your inventory to GL reconcile. So before we talked about our subledger to GL reconciliation, you do have an inventory to GL, which it does a similar thing, reconciling your inventory subledger to your general ledger. A lot of accountants like to run this at your month end or year end for financial reconciliation. Really great report to use for auditing and compliance. So again, going back to aligning that system with what's physically on the floor, your inventory to GL will tell you from a quantity, dollar-wise perspective, what's been posted and what hasn't been posted, right? If you've got anything, if you're using expected cost, you can see what's sitting in your expected receipts as well as your expected ships, right? So you've shipped and not invoiced, you've received and not invoiced. You can actually see values there and what's actually been posted to the GL. So if you've got discrepancy between quantity and what's being posted in the GL, your inventory GL is a very good report to run and validate that, and in conjunction with your subledger reports as well. Okay. Now, my final tip here is review, report, and optimize. You can't fix what you can't see. So there's lots of great tools in NAV and Business Central to really get a pulse on your inventory. So we talked about clean practices around inventory tracking and management. So we talked about my Swiss Army knife, the physical inventory journal, and then we talked about some really great reports that you can use to help you align your inventory. Now we can take a deeper dive into how we review, report, and lastly, optimize. So there are a couple of best practices here that I want to call out. So how many people are using expected costs posting? Do you have that turned on? If not, for whatever reason, because there are reasons to have it turned on automatically or not, depending on if you have that turned on or not, your inventory might be affected, right? So what you're seeing in your report from a cost perspective might be different from what you're seeing in physical count. So you definitely want to ensure if you're turning that on, this will help you see your inventory value reflect your expected cost from your purchases as well. So if you've got inventory in hand, you're looking at your inventory valuation, you're able to see that more accurately if you've got your expected cost turn on, because when you run your some of those reports we talked about before, looking at that inventory to GL, you will see that cost recognized, which will align with the quantity you've got on hand as well. Timing differences between posting dates and reporting can be a challenge. Now, especially at month end, and if you're managing posting dates with users, right? If you're managing that with a user setup and a general ledger setup, you want to ensure that your posting periods are matched up so that your physical and your financial booking of that is occurring in the same period, right? Most of your reports will have an as of date or a period start and end date. If you are posting one activity in a different period than the other, so if you're posting your physical receipt of the items and the financial impact of that in a different period, that can cause issues with reporting. Okay, so we want to make sure we are checking for mismatched posting dates and ensuring that whether we're posting that through documents or through journals that those posting dates are aligned. Manual entries being posted through journals oftentimes can cause issues with reporting. So if we are doing journal entries to correct inventory, but bypassing subledger logic, that can create discrepancies between your subledger and your GL, right? So adjusting in, going back to our Swiss Army knife, your physical inventory journal, that posting allows you to balance both the inventory activity as well as the financial impact. If you're using journals to do corrective entries around inventory, we want to ensure that we are not bypassing our subledger logic to create a discrepancy between our GL and subledger. Inventory posting settings, I could probably tell you a couple times a week we have clients complaining about incorrect postings. And part of that is what we will consider wrong inventory posting group setups. As we think about reporting and optimizing our inventory, we want to ensure that our inventory posting group settings are correct. When items are created, one of the best practices would be to create item templates. If you've got items that are being created on a frequent basis, to ensure that the treatment of these items, so the posting setups for them, are accurate. Okay. If this is not done, we can see discrepancies even when we run subledger reports, as sometimes the GLs that are used for postings are incorrect. And so at that point, it can be a tedious fix depending on how long this has been going on and what items are affected, if we can do an isolation on those. So doing a quick audit of your posting groups or using things, your inventory posting groups, and using things like item templates are really easy ways to ensure that you are reporting inventory cost correctly. Missing adjustments is another way that we can keep our visibility on your items and the postings to your GL. Ensuring that your purchase and sales are posted, you're running things like cost adjustments on a timely manner. If you're using things like item charges, those are being posted through, and they can also reflect in your GL once you've ran your cost adjustments. That can impact your inventory valuation. So if you're running your inventory val, that can have an impact there. So ensuring that you're not missing any cost adjustments from a costing perspective, and also making sure once you've received items, you're posting those as received. And if you are also using a two-step process on receiving, once you've received them, you're also posting those into inventory as well. So you move that with your putaways. Okay. And finally, blocked or deleted items can impact your reporting capabilities. So if you are working with a lot of obsolete or blocked items on your GL, we highly encourage that you do a systematic cleaning of those items, if you will. Whether they're being dispositioned out, you're moving them to a special location in the system, or you're doing periodic write-offs. If you are running reports on inventory value, I've actually seen a case where a client has had, when they did their go live, they actually had quite a bit of inventory that was obsolete, but they brought it in on their open inventory. They eventually dispositioned it out within the first year. However, in year 3 of operation, they still had that cost in the GL. So ensuring that any blocked or deleted items are being managed and appropriately cleared out of your GL is very important. And that really helps you to optimize your reporting so that you have less issues to fix, right? And have a cleaner GL as well as cleaner inventory counts. One of my parting thoughts as I segue into opening for questions, inventory is the only place where losing count can cost you thousands and probably even a few gray hairs. So ensuring that you've got some really solid counting processes, clean counting processes, utilizing some of the great reports that we have in Business Central and NAV actually, and ensuring that you are practicing some of these best practices, or at least incorporating those in your processes for inventory management will really help you save some gray hairs, right? And also not cost you thousands, and in some cases, millions. But we know that you will take these tips and utilize them so that you are not losing money or hair.